morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 19th October 2020 in the international market. US retail sales jumped 1.9% in September versus expectation of 1.2% increase. Back on the high retail sales, US Treasury yields climbed and USDINR closed 2 basis points higher at 0.76 percentage points. In Europe, the treasury market is worried about another lockdown due to increased coronavirus cases. German 10-year is seen at minus 0.62 percentage points. In the crude oil market, with rising COVID-19 infections in Europe, India and many other oil-hungry countries, the demand is not returning anytime soon to pre-COVID levels, which was also reiterated by OPEC Plus member nations. Brent crude, with this information trading at $42.96 per barrel, we still maintain our long-term stance of $50 per barrel in next 6 months with a watch on coronavirus cases. In the currency market, dollar index or DXY is trading at 93.70. It has been consolidating at this level and it has not breached 94 levels recently. Dollar index range for today is seen at 93.57 to 94.20. USDINR or Chinese yuan is trading at 6.89. If we talk about USDINR with a high of 73.44 closed at 73.35 on Friday. Point to note again is USDINR has not breached 73.50 even on an intraday basis yet for many sessions. Today's USDINR range is likely to be 73.30 to 73.65. Again, make money in a very narrow range of USDINR. And for trading range, we will be available once the market opens. If we speak about the domestic market, after the government's revised borrowing plan of 4.88 lakh crore in H2, the domestic treasury yields were up. As the RBI clarified, the additional borrowing of rupees 1.1 lakh crore will be in 3 and 5 year maturities, as we at night research predicted a rise, and finally 3 and 5 year maturity yields were up 5 to 10 basis points. On Friday, 579 GS 2030 closed at 5.93 percentage points from 590 the previous day. 16th October 2020 GSEC auction analysis. Let's do that. 522 GS 2025 cutoff F at 529, which was 13 basis points higher from 2 days close. The main reason for the increase in the yields for 5-year bond was government's revised additional borrowing in a 5-year paper. What a coincidence. We had in this very podcast asked all the clients to exit 522 GS 2025 on October 14th at 5.16 percentage points, 5.16. Then on October 15, the additional borrowing news in the 5-year came, and on October 16, the 522 GS 2025 closed at 526. We have saved 10 basis points, which is approx 0.4 percentage points in just 2 days for our clients. Just to give you the rationale, on a 5 crore lot, 0.4% translates to 2 lakh rupees simply in just 2 days. 619 GS 2034 cutoff was seen at 6.29. In short, the markets are now behaving normally and we expect the range bound markets till the US elections. The expectation of a new benchmark after 577 GS 2030 will pick up soon, and that can bring a small rally in yields. Markets will be range bound once again, and make use of this intraday and short-term trading to mint money for your respective organizations. If you haven't subscribed to our trading or auction services, you can reach out to us on 9930307466 or research at nightfintech.com.